How's it going, everyone? It's Louis Crypto here. I'm back with another Hbar update for you guys. Today was CPI that just happened in the last 5 minutes of recording, so it'll be a bit different for you. We are seeing a pump in the immediate short term off of this news. We'll do some fundamental analysis first, then we'll come back over to the charts. Let's now head over to the fundamentals. So we have the CPI data. Essentially, it's just like taking the inflation into account and forecasting what it's going to be. So, of course, we did see another increase. So there's still inflation there. However, it was less than forecasted, which is great for us. However, because this is bullish, we need to also have in the back of our minds that the whales might take this bullish news and start to sell. Although right now we're seeing this and this is bullish, how the actual was lower than the forecast. If we click the details over here, it actually says if the actual, this, is greater than the forecast, this is good for dollar. So not good for dollar essentially. And yeah, this is why we're seeing a little rally, at least in the immediate short term. But we need to basically see what the whales are going to do, because again, this could be an event where, you know, all of the retail investors are like, okay, this is a great sign, let me now buy, and then the whales could take advantage. This is not a prediction, but it's just something to be aware of. I'm just telling you guys of all these potential scenarios that could happen, not what I'm actually predicting. I would say at the moment to stay out the market, which is quite funny because I'm in positions in the market at the moment. I don't mind if I get wrecked. It's totally fine. It's a trade that I put in last week. If I get wrecked, we get wrecked. If not, it's totally fine. It's a trade over here on Bitcoin that we entered over here. And this was actually posted in my Discord community. So if you want to profit it along with us, learn how to do it for yourself. Get all the tools you need to become a self-sufficient trader so you're not just gambling in this market. Then private message me on my Twitter. It's Louis_crypto. Hit those links in the description where you'll find my link tree, and you can either click the Twitter link if this wants to load the Twitter link over here, or take action through this link or this link. Whether you just want a single session to try it out, don't worry, you can private message me for more details. And let's now head back over to that Hbar update. But yeah, so that was some fundamentals on the CPI data release. Now let's enjoy the rest of the day analyzing Hbar. So I'm going to go to a perpetual contract one so we can see every move instead of those gaps. So here we go. We see that today, or in the last hour, we've pumped up about 0.5%, so not too much, after breaking out of this double bottom formation on that exact support we've been talking about over the last few days. So as we were somewhere up around here, we were talking about this purple box coming back down to that area, holding at support, as it was a previous resistance to the left, as well as a previous support. So this is why we were marking this area out exactly for you guys. If you remember on the daily time frame, this was that 1414. In fact, guys, if you've been tuning in ever since this low point on the 1618 at around 4.2 cent, this is exactly where I called for a pump from this location up all the way towards the 1 Fibonacci. So we did continue a little bit higher, but we did call for this pump all the way to the 1 Fibonacci, a 25% pump on the channel, where we come into a resistance of the 55. So we see the candle closes down here at the 55 daily, but we can see that price did get above the 1 Fib level, trying to invalidate any further downside to these 2 Fibonacci's. I saw quite a few people in the comment section saying that they can see Hbar going down here. For me to believe that is so, I want to see this wick being lost, the 1414 is slightly beneath at 4578 cent, and then this would suggest we're losing this higher low. We're coming for this low to see if we can lose it. Again, even if you do lose this 1414 area, or specifically 4578, it's not necessarily suggesting that we come down to here, because you'd still be higher than this low. So technically, even if you come down to there, it would still be a higher low, but we're not down there. So this is just, that was just a message to the people in the comment section yesterday, believing that we could come back down to about 3.5 cent. So I've just explained how that would be possible. You need to go ahead and lose this wick and the 1618, but technically, yes, you can be prepared for that, because when we pumped up into that 1 Fib level, we're trying to reclaim it. But even as a bull, with in your mind believing, or with the scenario in mind that we want to go ahead and invalidate any further downside, even if you have that in mind, you need to understand as we approach the 1 fib level, that is previous support. It has to be resistance. So even when it gets rejected, the rejection does mean we are looking for that continuation lower. But even as a bull, you need to understand that we could just be rejecting it to put in that higher low in that exact area. Even can come down to here. That's totally fine. But we are holding this area over here at the moment. And so with that, as long as that's being held, you've got another chance of breaking through that 1 Fibonacci with targets up here at the golden pocket being that previous right shoulder of this shoulder, head and right shoulder. So head and shoulders pattern over here, which we validated at this point, which happens to be the neckline at the 786 fib 5830. In fact, the 200 EMA sits there. So if we were to now break out of this inverse head and shoulders over here that I spoke of in the last few updates, we can see the target out of the inverse head and shoulders is pretty much where we've been calling for price to pump to. As we were coming down to this area, we had this line already drawn even before it started to come down, simply because we were expecting this to be tested. Previous support to the left, looking for a reversal from this location, and this is where we've now formed a potential right shoulder, head and shoulder. It's not a valid pattern as of now, but as we are creating this higher low, this is a push up, this is a retracement back to key levels of support, looking for that continuation higher, and the inverse head and shoulders pattern is pretty much the 0.5 Fibonacci, just slightly beneath. Look at that exact close right there, 6346, so 6.34 cent essentially. This is where the inverse head and shoulders target is, as well as that previous arrow that I had previously drawn a few weeks ago, suggesting that price was going to hold this and continue higher. Let's now check the Fibonacci's from this low to this high. It's essentially saying that the support that I did draw out a few weeks ago is actually also the golden pocket, so further confluence that essentially that we are correct. So if you want to essentially do the things that I'm doing with ease, then just private message me for more information and I can help you achieve your trading goals. Essentially, I've taught over 85 people. There's about, let's just go to the Discord community. So 10 people online, 77 people. And if we just go to the everyday updates over here, we can see that I posted that trade in the Discord community over the last week, essentially suggesting that price was in the lower band of this range. We can see we're in a range bound market and that we're taking it back to the range high. So you could have closed trade over here. I'm waiting for a little bit longer, but this is a risk-free trade anyway now, essentially because I've moved stop loss into entry, into profit. So if anything does go wrong, then it's not even a worry anyway. It's a risk-free trade, and this is what I really do try and drill into my students' minds, that by protecting money, you're going to go ahead and make money. Even not trading is going to protect your money and make you money in the long term, because if you're just trading to trade, you're going to lose your money. So by not trading, by reducing the amount of times you trade, you're reducing the amount of losses that you're going to take. And so all in all, by protecting money, you're going to make more money. So that's it from me today. Let me know in the comment section below whether you still think there's a possibility of coming down here. Again, I need to see those things in place. Maybe if we aren't going to validate this pattern by breaking out over here, you could say that we're running into resistance, looking to break this 1414 and heading back down to this low. But as it's still support, you could still bounce and break out. We just need to see how it plays out. Don't you worry. I've let you guys know of all the potential possibilities today, including that fundamental analysis on the CPI data release. Let's go back to the 1 hour time frame, see what's going on. So just keep in the back of your mind. It's not a prediction, but it's just something to keep in the back of your mind. Another possibility that because this is some bullish data, as it wasn't as expected, it was in our eyes better than expected, not not over here. Of course, it's less than the forecast, so it's not again not good for dollar, and so that's why we're seeing cryptos pumping, at least in the short term. But please keep in the back of your mind that the whales, if they've been buying since down here, they could be looking to take some profits from the market. So not really that's going to happen, but keep that in the back of your mind that if we do dump, that's essentially the reasoning, because all the retail investors right now are starting to buy some crypto. Look, that is great. Inflation started to come down. There's still inflation, it's still increasing, but it's increasing less than expected. And so I'm going to buy some crypto, and then the whales, just keep in mind, they could dump on us. But we still got some bullish crosses on the 1 hour time frame, suggesting that it is in an uptrend. We've got some bullish crosses on the 4 hour time frame now that we are above breaking out this double bottom. So looking to test this area over here once we break past the 200 EMA, which is also this 1.272 fib. I'm I'm looking for a pump to about 5 cent. 5 cent is a key psychological resistance level, so we need to break through that, and then that is the inverse head and shoulders neckline, which we want to flip into support to get this nice pump, which would be a pump of about 25 to 30%. Guys, I hope you enjoyed it. I know a lot of you haven't liked or subscribed. Over half of you aren't subscribed. Let's get to 7,000 subscribers. If you can share these videos, that'd be much appreciated. Turn on those notification bell on, because I'm also going to be doing live streams, and I'll catch you in the next video. Don't forget to private message me over on my Twitter, or take action through the Linktree links if you want to be part of my Discord community as a student, or just to take part in the community. Thank you, guys.